Welcome to Markets Now. I'm Michelle Rook with Beadle of Paradigm Futures. Lots of green on the board and grain and livestock futures trade, with the exception of a few cattle contracts. Kent, let's talk about the grain trade first of all. We're making new highs for the move in the corn market. Soybeans up strong. How much of this is the Trump effect? The fact that there, first of all, will be no immediate tariffs on China.
I think everyone breathed a little sigh of relief that new tariffs were not a day one proclamation. I think that certainly helped grain markets today. I do believe that we still have in front of us President Trump's discussion around potential tariff increases of 25% on February 1st. I think that the marketplace is taking that as a negotiation tactic. I do believe that both parties, the Canadians and the Mexicans, are going to be anxious to sit down and have a discussion around this issue. I did hear on one of the news programs this morning someone from within the administration say that this 25% potential tariff in Canada and Mexico is all about the fentanyl situation and the need to have all parties address this. So I think that provides some optimism that that we might be able to avoid this huge tariff with our trading partners. But I also have to say that strength today is somewhat tied to South American weather still.
Yep, I was going to ask you, it's hard to peel the layers back and see what part is South American weather versus this tariff thing, right?
Yeah, so South American weather this morning, in my mind, is somewhat mixed. There were showers. Of course, these are showers that had been forecast in Argentina, southern Brazil. There appears to be a weather pattern that might bring more rain into those areas. So I would obviously chalk that up maybe on the bearish side of the equation, but clearly the markets are not paying attention to that today. I have to note that there were some social media reports over the weekend that indicated two things. Number one, that early yields in Mato Grosso have been disappointing relative to the very high expectations that so many traders have seemed to have about what might ultimately be produced in that part of the world. Actual pictures on social media, which we obviously have to take with some grain of salt, but some pictures of soybean pods that had been split open either due to soybeans that had swelled up due to excess moisture or even due to sprout. So again, hard to necessarily know how widespread all of this is, but we did have reports late last week about harvest progress in Brazil only being 1.4%. The average is closer to 6. The record pace is actually around 12. So we're behind, and this has an impact on both beans if they sit in the field and potentially are subject to this moisture problem, but also an impact on safrinha corn and the pace that safrinha corn gets planted. And we need to have a quicker pace if we're to avoid potential problems down the road with lack of rainfall, which is the seasonal tendency as you start to move on through the growing season in Mato Grosso.
Right. The grain's also getting a little push when we talk about tariffs from the dollar pulling back as a result of the lack of tariffs being announced by the administration, right?
Yeah, that's probably most prevalent in wheat, which is up double digits in Chicago this morning. Running into some resistance at the 45, 50-day moving averages. Going to be interesting to see what we do with that. And it's also going to be interesting to see what happens with movement from the U.S. farmer, because I think that we're seeing a fair amount of that. I think as the markets have rallied over this past week and are rallying today, I think it's very likely that we've run up into resistance areas in a lot of cases. The soybeans running up into last week's highs, and corn running up into $5 against the July futures contract. I think growers would very much be anxious to sell something with a 5 in front of it, and it's very likely that that farmer movement might make for a little more choppy and a resistance sort of dominated kind of trade here for at least a little while, until we work through the amount of bushels that would like to move against this rally.
No doubt. You talk about resistance areas too for soybeans to take those out. How difficult will it be, since the funds have already added a big wad to the length now? They're actually long in soybeans, aren't they?
Well, they, and it depends on how you. I tend to follow the somewhat older CIT report, which strips out index funds. The index fund investment is more passive and tends to get in and out less. And that's my preference as to what I follow. And on the CIT report, the length in soybeans is 2,000 contracts. Now, it is the first time that the soybean position has been long, net long at all, since late in 2023. But in terms of how much could they still buy, that number is 200,000 to 300,000 contracts if they would wish to do so. So, and there's still that much room in the corn position as well. Now, I know that most of the trade likes to follow the managed money position, and there's been a fairly sizable gap between the long position in the CIT report and the managed money position, which means that there's some differences and discrepancies in other length, as well as that, as well as the swap position in the newest CIT report versus the index fund position in the CIT report.
Okay. So just one follow-up on tariffs, and then we'll move on. But President Xi and President Trump having a conversation last Friday that seemed to be fairly productive. And certainly there's been a lot of discussion about going back and revisiting the phase one deal with China.
Sure.
Do you feel like the market is perceiving that that is a possibility?
I think the market does perceive that's a possibility. I think that China very correctly perceives that U.S. actions, in response to their actions, could be very detrimental to the Chinese economy. And I think that given that the Chinese need to import a very large amount of foodstuffs every year in order to feed their people, that one of the easiest wins that they can have is to give some concessions to the United States on where they buy their feedstuffs from.
All right, let's talk about livestock. Cattle market trying to move back higher here this morning. Record cash last week, 203.67 on the weighted average. So is it just all about cash, you think, this morning?
Still about cash. Still about this underlying fundamental that appears to be very supportive. Ultimately, we have to kind of ask ourselves, at what level are these supportive fundamentals priced in? And of course, we also have a very large, long speculative position in cattle. And, that has led to, fairly volatile trade and, a number of fairly significant corrections. We're likely to have more of those, but, the cycle in cattle to actually start to provide additional supplies against, these high prices is one that takes a long time. And of course, we don't have as many feeder cattle coming in from Mexico, even though there's a lot of rumor that we're going to start to see more,
Right.
and that's having an impact. So, it's been bullish cattle, and could well remain bullish cattle for some time.
Right. And Hogs back higher here after a down day last Friday. Not seeming to be real concerned about Mexico and tariffs there, or what about mass deportation and the impact that that could have on processing plants? Are you surprised that the market isn't concerned about that either?
Yeah, well, I mean, of course, the impact on processing plants is twofold. It would be a backup in hogs, and very detrimental to nearby cash hog prices, and then of course it would be extraordinarily supportive to the pork cutout. So, uh, you know, I think as we look at this situation, we have to assume that the administration understands the economic impact of some of the things that they've proposed. It sounds as if the initial executive orders are focused on things like deportations of criminals and the like. And I think the market is still waiting with some bated breath to see how these proposals ultimately turn into realities.
Okay. Thanks so much as always. Can't beat it with Paradigm Futures. Remember, futures and options do have substantial risk. That is markets now.